In the currency quadrant today, taking a look at the June British pound contract, high volume yesterday and today in the two-day sell-off that we have had. Two consecutive sessions with good volume to the downside isn't necessarily a bullish sign. It's likely to be more bearish than bullish when you see that kind of volume. It could be a lot of longs liquidating positions as the pound has been on a pretty tremendous run, save for this week where it's moved mostly sideways. The two consecutive days lower that we've had have really brought it back down to the bottom of this week's range. On the low side of things, down 71 basis points. We ended up settling the day down 43 basis points. The low one spot, 38.34. The settlement about 138.73 or so. On the high side, all the way back up above 139, 139.63, which was up 22 basis points. Now, we did have a Bank of England meeting this past Thursday, and the Bank of England took a dovish tone similar to the U.S. Fed. They made no changes at all, no changes to the asset purchases, no changes on rates, and nothing dramatic in terms of if-then statements from the actual statement from the Bank of England and the press conference. They didn't really say much of anything at all other than they're comfortable where rates have gone, not just in the UK, but the rates in the US that are driving some of the rates in places like Germany and the UK itself. They're not necessarily worried. That dovish tone is part of what hit the pound the last couple of days. I would argue that it's the main factor. Even if you look at the dollar index today, the dollar index gapped lower, but then finished much, much stronger. That's on the backs of some of the majors like the euro and the British pound and the yen to a certain degree, just weakening off of their central banks, following the lead from the Fed. Now, we do have key data in the UK next week. It brings UK retail sales comes out next week. Their employment data is next week. Their final February inflation figures, along with March flash PMI data, which will likely be the most important of that batch of data, maybe retail sales, but that flash PMI data will tell you, based on manufacturing, composite, and services data, how the UK is doing in terms of coming back out of the COVID-19 pandemic, which they're the most aggressive in terms of vaccines in that particular region and are doing the best so far. So we'll be keeping a close eye on that data next week.